Hey, everybody. Welcome back to another episode of the 6-5 podcast. It's Friday. It's morning. We're almost on time, usually getting our start at about 9 a.m. Central Time. But this morning, we're running a little bit late, but not so late that we're not going to be able to get the show in because we love you and we want to talk about all the big things that happened in tech this week. Big show this week, Pat. You and I on the road at Dell World. But, first and foremost, before I introduce the show, the topics, and get everybody fired up about a week in tech, how the heck are you, my friend?
Doing well. Got 2 really good nights of sleep. And you know me, that's my jet fuel for the day. Actually completely shaved too. Gosh, it's probably been a month. But hey, I'm just hunkering down to get back and be on the road. Let me see. Next week I have I have Portland, Sonoma, San Francisco, Orlando, Boston, Armonk, and then back to Austin. I think half the trip or more than half the trip is with you.
Yeah, it's going to be a lot of fun. I'm sad to not be going to do that West Coast jaunt because there's nothing like a 6-hour cross-country weekend trip to get to an event on a Monday morning.
It is a red eye. I'm taking the red eye to SAP Sapphire. So.
I do that sometimes. But yeah, so that is what's going on next week. We've got SAP Sapphire. We've got IBM Think. We have Red Hat Summit, which is going on during IBM Think, which we'll be at least trying to maybe walk over and say hello to our friends at Red Hat, which are part of IBM. Amazing that those events are going on at the same time. And then we have Micron's Investor Day, which you and I will be trying to remotely tune into as well. And then we'll be jaunting between events and home. And we also, by the way, are going to be sitting down with Arvind Krishna, CEO of IBM, for the recording of our big 6-5 Summit opening session. Couldn't be more excited about that. Check out the65summit.com. Register now. It's going to be a world-class event. We're nearing 70 speakers, 12 different tracks, everything from, your traditional cloud data center infrastructure, all the way to the metaverse, automotive, and ESG. It's going to be a mega event, the best in tech, the Davos of technology. Pat, thanks for flashing this slide. There you go. You're seeing some of the speakers are starting to pop up here. The event is getting bigger and bigger and bigger, and every day we're adding more. But you know what? Just go sign up because I can't talk about it anymore right now because we've got a show to do. Pat, this week, you and I, Dell Tech World, back in person, felt like a real big event, almost normal, so we'll talk about that. We had some earnings this week, not like last week. This isn't a quote-unquote earnings palooza, but we did have quite a few. A couple big semiconductor earnings, AMD being the big one. Lattice Semi, another company we track closely, had a really great result. We'll talk about that. Some news from T-Mobile. Honeywell launched something. Qualcomm keeps on winning. So much here to cover. Quick review and recap for everybody out there. The 6-5 podcast is for information and entertainment purposes only. So while we are talking to publicly traded companies about publicly traded companies, please don't take anything we say as investment advice. And if for some reason this is your first time listening, first of all, we accept your apology. Second of all, we do try to pick 6 topics, handpicked each week, and we try not to do news. We try to really give more of an in-depth analysis. That's what the 6-5 is all about. Patrick, I think I covered it all. You want to talk some tech?
Let's talk some tech. Let's jump in. We're 3 minutes and 47 seconds in. Let's do this, starting with
Dell Tech World. So as I mentioned, Pat, we are back in person. First and foremost, this is the inflection point. These last about 30 days. We are seeing the tech world make a monumental shift back to in-person events. Over the next 3 months, you and I will be at no less than probably 15 to 20 in-person events. The era of the virtual event is going to be down to one virtual event that everybody must attend. That's the 6-5 Summit. We do that very intentionally because we have 20 plus CEOs from global companies. But overall, the tech world is shifting back. It's a good sign. It means that I think the macro indicators are that the COVID wave is coming to a point where it will no longer be impacting company strategies in terms of having in-person events. Something monumental would need to happen. That's the first and foremost. Dell Tech World itself, though, Pat, was a really big event, covered a ton of ground. too many announcements to necessarily cover. So I think I could talk about a couple observations. Maybe you could talk about a couple observations, and we go from there. First and foremost, as I saw it, at least my feeling was Dell is really putting its claws around this multi-cloud era. The company made a number of announcements that really are about its capabilities to support the enterprise of the future in terms of having workloads placed in many diverse locations, on-prem, at the edge, in the public cloud. And its architecture, its design, its development, and what it's building is really about the fact that we're going to see this continue to proliferate. This was notable with Apex, which has continued to expand its offering. It's still more in its infancy than some of the other on-prem cloud offerings, but it's moving along pretty quickly. You had Project Alpine, which is another tech, that's really moving in that direction. Pat, I was trying to think for the sake of the show and trying to keep our sections into about 5 minutes of what really caught my attention. There it is. That's the one I was going to talk about. What really caught
I'm your second wife. I'm your work wife, and I read your mind.
What really caught my attention was a strategic partnership that honestly I don't know that I could have expected coming into Dell Tech world, and that was Dell and Snowflake. You basically have one of the most well-known and respected on-prem IT infrastructure companies on the planet with one of the most notorious born on cloud native SaaS subscription data warehouse services. And basically this partnership took the technology of saying, hey, whether your data is on-prem, whether your data is in the public cloud, or whether you want to have data move between the public cloud and prem, Snowflake is going to enable customers that have on-prem Dell PowerStore to be able to basically access their data and utilize the Snowflake interface. And to me, Pat, this was like the penultimate example of cloud and prem working collectively, and it opened up the Kimono to a whole new era of born on cloud software using on-prem infrastructure to strategically scale its business. For Snowflake, it's a great partnership because there's tons of data that, doesn't necessarily find its way into Snowflake because companies have historically been cautious about the spend related to the egress and moving data to public. And so the data scientists aren't able to maximize the data that's being utilized. Now they're basically saying wherever the data is, on-prem, at the edge, in the cloud, we can make that data accessible to Snowflake. So that to me, Pat, was probably one of the most compelling announcements that were made, but there were several. And by the way, just a lot of great conversations. I won't dig too deep into this here, and I'll give a little ground for you. But sit downs with Michael Dell, sit downs with CFO Tom Sweet, sit downs with Sam Grocott, who leads product globally. And just what I loved about getting back in person was the fact that we were getting time, quality, close up and personal time with the Dell executives to really not only hear about the announcements, but to get into where the company's going, its vision, post VMware, post multi-cloud era, post remote work spike for PCs. How is the company going to keep doing $100 billion a year? Very encouraging couple of days in Las Vegas. Thank you, Dell. Pat, I'll pass it over to you.
Yeah, you hit a lot of good points there. And first and foremost, Dell put on a great event. While it would have been nice to have a little bit of free time, I did appreciate the amount of one-on-one or small group conversations that I had with Dell's most senior executives. I pretty much met with the entire ELT in one way or another, either one-on-one or small group. And those to me are the best times spent. You get a certain level of confidence from the company. And, Michael is the bellwether, right? I looked to Michael and Jeff and newly minted co-COO Chuck Whitten to their level of confidence. And their confidence was high. Even though Dell has started a little bit later in as a service with Apex, just the fact that they have infrastructure and clients, I can safely bet that in 10 years they'll be the highest revenue as a service company. I did appreciate Dell keeping the messaging very crisp. If I connect day one keynote with day two keynote, three key themes came out. And a lot of this was a reinforcement of what a post-VMware world looks like. I think first and foremost, this element of trust. And my first thought was, what are we talking about? Everybody says that they're the most trusted resource out there. But what Dell did was really setting the stage for why you need to trust us with your data, whether that's on-prem, colo, public cloud, or any type of instantiation out there on the edge. And what that really leaned into is like Project Alpine, which is the ability to store, do DR, backups, everything you would want to do with your data in the public cloud. And with Project Alpine, we saw, an AWS demo, but there were buttons for GCP and there was a button for Azure. So trust, multi-cloud, and then on day three, I think it was about innovation, about what Dell can do for its customers, not only on the client side, but also on the on-prem and cloud side. Really good meetings with the client folks. I had dinner with the executive staff there. I can't divulge. I mean, this wasn't a big client launch. In fact, the big launches here were Apex, Project Alpine, but also some really big storage announcements. My vice president and principal analyst of storage and data, Steve McDowell, wrote about this on Forbes. But huge updates to the Power family out there. There were over 500 features that were pulled in that probably won't all get everybody watching us, too super excited, but in the storage world, this makes a huge difference. Dell is the leader in storage. They hit all the way from small business all the way to the largest, highest performance attached to mainframe type of storage units. And it was good to see Dell come out with these zero trust based systems. Again, get it? Started with trust. We have zero trust Dell storage kernel with Power Max. So again, so many takeaways from the show. I left pretty excited and pretty tired at the same thing. And I do feel that if the company can execute, and I do think Dell is an execution machine, they're going to be in a very good place. I do believe to get bigger attraction from investors, they do need to start showing some subscription numbers, some as a service numbers, or some cloud numbers. The company this year and next year can't necessarily rely on the big gains in client. While I do think, the PC business will grow, it's not going to grow anywhere near what it grew the prior 18 months.
I think you wrapped that up pretty well, and I think you made some really good points about the financials. We had some good conversations with those teams as well, but that stuff's going to be, I think, dripped out over the longer tail, Pat. I just think they're gonna get a little more critical mass before we may hear more about that. But I know you and I both have opinions on that, and those opinions were shared for sure. Let's jump on to, look, the market says tech sucks and everything is on sale and the building is on fire. But AMD basically, put its proverbial middle finger up at the market and said, I think the demand for semiconductors is big. And they proved it with some really robust numbers, Pat.
Yeah, they did. So let's jump in here. So as you can see, they beat on EPS by 22% and beat on revenue by 5.6%. Just an absolute blowout. And the key here is this wasn't just off the back of Xilinx, okay? Right? When you beat expectations, these are financial analysts that already have these numbers already have these numbers baked in. But if we drill in a little bit to the content here, let me find the right slide. So yeah, they beat and they raised. Record revenue up 71%. Gross margin, they increased by 2 basis points to 48%. Record earnings per share. The computing group was up 33%, pretty much on the back of Ryzen and Radeon. They had record operating income. There's no Xilinx in here at all. And then you have EES, Enterprise, Embedded, and Semi-Custom. They were up, all lines up 88%. Epic Server doubles revenue again year over year. Again, no Xilinx, but Xilinx was up 22%, which was pretty impressive. I want to put a focus, kind of a little long term, and I think visually it says a lot here. So here is the 1, 2, 3, 4, 5, 6, 7, 8 quarter revenue trend by AMD. pretty astounding. Oh, but there must be something on gross margin that's wrong. Oh, well, actually, gross margin is up and to the right, big time. Well, it must be an op-inc thing. Then they can't possibly be doing this well on EPS. Well, here's EPS. I mean, just an absolute blowout. And then you say, well, gosh, it must be this Xilinx thing for the first quarter. Well, actually, here are AMD results excluding Xilinx. And you can see the monster numbers that they cranked out here. My final comment here, macro-wise, is about Xilinx. And I think Xilinx gives them durability between troughs in the industry. Xilinx business and the customers they have are less driven by the wackadoodle up and down PC market and the enterprise data center market. So I think that gives them a little bit more durability. Xilinx also brings in a higher gross margin, which I think is good as well. But I just feel like, Daniel, AMD just kind of hit a different place.
Yeah, Pat, the overall performance of AMD has continued to boggle the mind, and it's not been a secret. I had plenty of critical comments about AMD early on, and I thought maybe their momentum had more to do with some of Intel's misgivings, missed deadlines, than it did with AMD's performance. But it's starting to look, I think if you actually look back to when AMD had about less than 1% of the server market share, some of the comments that Lisa Su made about basically her fundamental beliefs, philosophy, what she thought and foresee happening, and most of them have come true. So she's looking incredibly smart right now. Of course, doesn't need my vindication. The market has done that. I also think, Pat, you covered a lot of the results very well, but I think one of the most interesting things is I can't stop thinking about the decoupling of the market and the results and the demand for semiconductors. And of course, personally, I think a lot of us have taken a beating over the last several months in the market if you're long growth. And I'm not long AMD, so I'll be very clear about that, or really any company that we talk about on this show. But just my overall perspective of how important tech is versus the way the market is perceiving tech. Despite this humongous result and this great overall performance by AMD, the stock in the company is down like 40, 50%. It's still way off where it was at its high. But this is one of those companies that if you look at them and you have a long vision, their trajectory seems to be up. And the demand for chips, the demand for even PCs, which we all thought, Pat, were going to fall really hard when the remote work and the pandemic slowed, is showing that when you're building high quality premium products, the performance has been sustained. So a lot of the fall off in PCs over the last several months that has been out there has been in Chromebooks, ultra low end. But at the middle and upper tiers, the performance has been robust. We saw this with Qualcomm's numbers. We're seeing this with AMD's numbers. Even in Intel's numbers, a big part of their PC miss had to do with that low end of the market being so weak right now. But on the other hand, Pat, the data center business is just outstanding. The growth of that, because I think, the PC business showed that it's more robust than just remote work and the pandemic. But the data center business, whether that's cloud scale or whether that's enterprise, is becoming extraordinarily sound right now. And companies that are kind of buckling down for a potential downturn in the economy, for a tighter market, are investing in infrastructure. They're investing in data. They're investing in AI. And a company like AMD is very well positioned to take advantage of that. The work that's been done to build their next generation of products, to be accommodating and refactoring workloads, some of the things that have been challenging have all turned the corner, Pat. And so, congratulations to Lisa and AMD on a quarter well done. Semiconductor demand is strong. I continue to believe it will stay strong. It's a deflationary technology that's going to be utilized for software, data, AI, ML, automation. And so the technologies that enable that are going to still be needed no matter what the market's perception is of technology. So, all right, let's keep moving. Let's talk about more semiconductors. What do you say?
Yeah, let's do this.
All right, rock and roll. So I'll kick this one off. Lattice Semiconductor, not a household name per se, but a darling of 2021. Was one of those companies that I had on a short list of semiconductor stocks you probably should be paying attention to, but might not be. Came out and had what I would say a remarkably strong quarter itself. 30% year-on-year growth, a 92% increase year-on-year on a GAAP, 72% on income, Pat. So pushing margins up. The company delivered a beat and raise again on the quarter, basically indicating that once again, the overall perception that we're coming to an end of some sort of tech growth wave was really wrong. I mean, you're talking about 150 million quarter for the company, but you're also talking about a company that's made some really important moves. First of all, it's growing across end markets. It's in all the right secular markets, Pat. There are companies in communications. It's 5G. It's in compute, servers, data center, security. It's in industrial, IoT, Industry 4. It's in automotive, and they're basically, the way they define themselves is as the leader in low power FPGA. But they've really advanced from being kind of at the low end of this market to being in the low middle and kind of meeting Xilinx where it goes middle to top tier. The company has, been actively diversifying its portfolio with, technologies, the AI space, their Certus Pro line. The company's got some new technology that it's rolled out with Lenovo that's being embedded into the new ThinkPad X1s. So it's got some new revenue streams that are picking up and that have been really strong, Pat. But you look across the board at, how the company's been performing, and it's seeing, 27% growth in its comms computing growth, 40% in its industrial and automotive, and then still seeing 20% this quarter on 19% in its consumer business. It's basically one of those technology that's coexisting in many product SKUs next to the Intels, AMDs, and other big name semiconductors, because FPGAs are becoming increasingly valid for very specific technologies that benefit from that flexibility, the ability to be quickly adaptable where an ASIC maybe doesn't make sense. So the company's in all the right areas. It's growing at the right pace. CEO Jim Anderson and his team are leading a very sound business. They've got the right partnerships with companies like Lenovo. They're in automotive. They're in data center. They're doing things like Sense AI, where, they're doing things like, ability to secure your device by being able to detect motion and vision. Just a lot of good areas, Pat, using the FPGA technology well, but also pushing margins, raising guidance. Company just seems to be in the right places, in the right field right now. And I think there's a lot to be encouraged by, despite the fact that they're not a household name. Lattice is looking very fit to have a good run, even in a more temperate market environment.
Yeah, listen, where do I start? Right, they crushed it on the quarter, right? Not on EPS, but also on revenue. And while it's not as big as AMD, it doesn't matter. CEO Jim Anderson and his leadership team I mean, how can you not give credit to them for what they did? They came in, restructured some things, got out of some bad businesses, figured out what their customers really wanted, and then they put the pedal to the metal and doubled, if not tripled, their product output. And this is really the growth mode for the company. And if you look at this chart right here, by the way, I'm really thankful that the company did an infographic. I think this is for the first time, but you peel back some of these numbers, right? On the comms and compute side, the big drivers to crank out that 27% increase were from servers, PC, and 5G infrastructure. And Jim and his team also are smart enough to know that coming in, people viewed FPGAs as difficult. But what Lattice does is they put a full stack solution against those FPGAs so their end customers don't have to get too much into the weeds of doing a full up programming for the FPGAs. They can change parameters to do what they need to do. Industrial and automotive, right? That was up 40%, absolutely crushed it. And the big driver there was robotics and industrial automation, which ironically, you and I are going to be talking about in the next segment. But 40%, it's interesting. I asked the company, wait a second, how did you do so well in this area when others didn't? And they talked a lot about supply chain. People just couldn't get competitors' parts where you could get it from Lattice. Not a whole lot of details on consumer, which was up 19%, but quite frankly, I don't think the company wants to put a focus on that. Let me flash up this right here. Kind of funny, not as crazy and nutty as the AMD slide, but still, how often do you see slides like this, where everything is up and to the right? And I know nobody brags about operating expenses, but quite frankly, if those weren't going up as the company was growing, I'd have to question the overall strategy. Final point here, Daniel. All of this performance is before what I'm most excited about, and that's Avant. Right, Avant. Right now, Lattice really hits the lowest power type of solutions. But there's an entire market, the mid-range FPGA, that is 2x doubles the TAM that the company has today, and really gets into the space of Xilinx and Altera. And Xilinx now, currently owned by AMD, and Altera owned by Intel. And both those companies have really put their biggest efforts into SoCs and higher performance FPGAs. So you have a new design with Avant coming in for the mid-range, sampling right now, going to hit in the second half. But keep your eyes on Avant, doubling the TAM of the company.
Good call, Pat. Good charting today, by the way. You are the better driver in this relationship. I just want to be honest. I just sometimes don't get it. I get so excited about all the conversation, I forget to flash the slides. Honestly,
if I could do this, maybe if I strike out in this, I can change your slides for you in all your podcasts.
You're a rock star, man. You are an absolute Slido machine.
Thanks, man.
All right, so let's keep this train rolling, buddy, and let's talk a little bit about some news from T-Mobile.
Yeah, it's pretty crazy. So you gotta love the way that T-Mobile does announcements, and check out the show notes, or maybe I'll flash up some of these quotes. They're pretty hilarious. But essentially, T-Mobile introduced a program called Internet Freedom, and this is all about the company's fixed wireless access. Right, some people have cable, some people have satellite, some people have fiber, some people have DSL. This is all about leveraging T-Mobile, which I consider currently the best 5G network out there in terms of breadth. So, first of all, they removed all the exceptions. Right, first off, you don't need to cancel your current provider to use this, right? They'll ship you a little box. I actually did a review on this on Forbes if you want to check that out. But the way they describe it is cheat on your internet provider with Test Drive, right? 15 days, worry free. If you like it, return it and owe nothing, right? You can go back to your old one. The other thing is cancellation fees, right? They will pay early termination fees up to $500. Let's say if you want to switch from AT&T to T-Mobile. And I love the way they characterize this. It was break up with your provider, and T-Mobile will cover the cost. And the other thing is they hit this thing which happens in the internet industry, which you get prices raised on you, right? And essentially they call this rest easy with price lock at $50 a month for as long as they're a customer. So they're literally guaranteeing they're not going to raise your rates. So they also did a couple business things, but this is not anything close to what they're cooking over at T-Mobile. So it's barely worth talking about it, but it's $55 per month. $50 per month or $70 per month, which compared to something like a Comcast is just pretty much blows it out of the water. So big stuff from the Uncarrier. I have to flash this, Daniel. I just can't help myself. Look at this. Look at this quote from the CEO. The Uncarrier was created to fix a stupid, broken wireless industry, and while we aren't done, we're undoubtedly change it for good, taking on big internet and bring the Uncarrier movement. I love this. It's ridiculous, and it looks a lot like the wireless industry a decade ago. Today, that all starts changed because the Uncarrier is here to disrupt broadband for good. Okay, what are we here for business, right? What is she talking about? She's talking about, by the way, I was supposed to meet with her yesterday. She says it's positively medieval. You have to battle with the local lord in each fiefdom just for internet access in your stores or remote offices. I don't know, man. It's Friday. That cracked me up. I love to see stuff like that in corporate America.
Yeah, I mean, look, Pat, this is a quick and punchy, typical T-Mobile identity, right? We're going to smack you in the face. They started off by paying people to switch. They, basically won the 5G race because of the, getting that coverage on a national basis quickly. Now they're able to take that and deliver it as broadband in the home. And anybody that's still paying, and I'm one of them, for high-speed internet from your local cable company knows the ridiculous hostage-holding techniques that they use with the bundles, phone. If you don't have the phone, you still pay. If you don't use the cable, you still pay. And by the way, the service just isn't that good. So it's disruptive. We've said this fixed wireless access would change the world. We knew it would. These cable companies, if they're not careful, companies like T-Mobile are going to eat their lunch.
Yeah.
In fact, they might already be cord cutting, over the top, streaming services, cord cutting like this. Pretty soon, I'm going to have no need for cable. So Spectrum, Charter, Comcast, you better listen up here.
Well, tell you what, you get me 1 gig and I'm in. That's why I'm still with AT&T Fiber, and AT&T Fiber is about to upgrade me to 2 gigs.
Yeah, I mean, there is, higher speed, higher connectivity for people like us that we need it. We can sort of warrant and justify it, but that's not everybody. And that's not, most homes don't need that. Most people don't do podcasting and broadcasting and high, all day long. But what I do love is that this is just kind of becoming the T-Mobile DNA. The T-Mobile DNA is rip it. And it means rip the market, rip the competition, and then replace it, which means rip it and then give a better alternative to people. They've got some work to do. I still want to see better millimeter wave coverage here in Austin. So if you're listening, let's get on that, please. I need more than 2 blocks of great millimeter wave coverage. But I do love the disruptive marketing. Man, they're good at that. Even
listen, I'd even like to see higher performance midband because
that's what I said. Fine. You don't want to give me millimeter wave. Just when I'm not on millimeter wave, make sure it's better than my LTE.
Well, Anshul Sag in San Diego is ripping 700 megabits on his T-Mobile, and I get maybe 100, right?
Yeah.
So I hear you.
I'm feeling it. Feeling it. All right, but we got to keep going. We got 10 minutes, 2 topics, so we got to move pretty quick. And we had a pretty solid slate of announcements at Honeywell. We talk about them a lot because you know what? When you talk about industrial and technology convergence, there may not be a company that's doing better. And by the way, there may not be a company that's doing better right now in this crazy market than Honeywell. Last week we talked about their earnings, but you know, the value industrial, the rotation, this company is in a really good position. But this week, the company also announced its new Honeywell Forge connected warehouse, which is all about basically enabling this industry for shifting operations, lowering costs, adding visibility. And, you know, the Forge line has been there for a while, but the market's continually looking for more clarity. What is this? What is basically the opportunity from Honeywell, from its software to deliver value? This is a company that has a huge footprint in the market, serving, real estate, retail, warehousing, and they're basically building an almost latency-free technology that offers, operations, maintenance to be able to collaborate seamlessly. Putting a dashboard of metrics, alerts, recommendations to help distribution centers do more with their analytics. I'm glad you're flashing these up, giving me the cues here, Pat. But to get a little bit of an understanding of why we get excited about the Honeywell Connected Enterprise HCE technologies, this company is basically looking at $100 billion, TAM here in terms of the opportunity in the markets it's serving. It's got software for real estate, for warehousing, for industrial, for aero and life sciences. You can read the chart. Sorry, I got a little enamored here, Pat. But you've got a really large opportunity, and the launch this week, leaned into that, the retail and warehousing space, which is growing really quickly. This is a company with a lot of domain expertise, which is very important. Companies that are looking to implement automation. You've got workforce shortages. If you listen to Amazon's recent earnings, you heard how difficult it is to scale up, scale down your retail operations right now, warehouse operations, back office, technology that can add automation. It's big on ROI. It adds a lot of value. And here's the other thing too is, the technology on the back end, Pat, and who I know loves to say connecting the front end and the back end. You love to say that.
I do. It's my favorite insight.
But in all seriousness, this is complex because the back office operations, that technology that can be able to look at performance, it can look at OT systems, it can look at the overall environments, the macro manufacturing or warehousing environments, and be able to connect that to your front end is going to be critical here. And that's what Forge is promising to do. It's going to take legacy technologies and it's going to bring it into the future. It's going to automate and improve data capture, process optimization. And it, of course, is going to take Honeywell's deep knowledge in their domains, which is one of the areas that I think we sometimes underestimate its importance, is that effectively, this is a company that understands the retail, warehousing, building technology environment, and they're taking that technology and they're rolling it into markets to be able to connect to those front end systems and streamline, the experience that, all of us are looking for. So you're talking about, just to kind of pull this all together, really the sites themselves, the assets on the sites, and then of course, giving technologies and access to the workers, including, by the way, humans in the loop and the technologies and the automation. So they're really bringing together kind of a full stack of services, Pat, that takes the facilities, the physical spaces, the operation, which is all the technology that's inside, the warehouse, the inventory, the packaging, the out the door delivery, taking all that together. And then, like I said, layering on automation and technologies that make this more and more seamless, add value to their market. So, Pat, in the spirit of time, I want to give you a few minutes because I know that we've only got a few minutes left in the show.
Yeah, great analysis. I really like where Forge is going. In mid 2021, you saw their real estate operations service come out, really hit on those non-residential real estate trends driven by a lot of the dynamics of the pandemic. And then, with the pandemic, we saw a lot of online buying, right? We saw what happened to Amazon. Gosh, we saw even happen with Walmart and even Best Buy, right? But what else did we see? We saw a lot of talk about how workers were treated, right? And I think with this solution, what Honeywell's doing is, they recognize instead of squeezing the most out of the employees, they're squeezing the most out of their assets, right? So how do you do this? Well, this is where you have their connected warehouse, which does, exactly what you were talking about, which was leveraging and optimizing every square foot of warehouse space through automating the movements of goods. Now, you and I may have visited a warehouse, I don't know, 6 months ago when we weren't allowed to take pictures of a certain solution in there. Just possibly that solution was Honeywell, but Honeywell wouldn't be able to talk about it even if it were. But I really like where this is headed, right? You've got health, ship, pack, picking. I had none of these tools when I was an 18-year-old working in a warehouse doing all of this, and I wish there had been. But hats off to Honeywell for hitting another inflection point with a real solution, but doing it with real tech.
Absolutely, Pat. This is one of those real world meet real solutions. It's not it's not super cool AI robots flying around and stuff, but they do drones flying around. So there's some pretty cool stuff going on over there. So hey, you know what, Pat? We got a quick one to sort of wrap the show up on, because God, it's like every week Qualcomm has another big automotive win. I mean, literally, it feels like they're playing against no one right now. They're competing only against themselves.
Yeah, it is. It is amazing. So there's a company called Cariad, and I hope I'm saying this well, but it's VW's tech arm that helps them with ADAS, fully auto, and other types of technologies. But essentially, the announcement was that VW will use Qualcomm's digital chassis from ADAS to L4 starting in 2026. I got a lot of questions that says, hey, no, wait a second, VW just did something with Mobileye. Well, here's the skinny, and I got a little background information on this. And essentially what's going to happen is there will be some overlap for a while. What I'm being told, though, is that VW wants one solution, not two, and that while there will be some dual sourcing for a while between Mobileye and Qualcomm, they're going all Qualcomm after 2026. So, and by the way, if anybody from Mobileye has any other different information, I'm open this, and I can't reveal my source, but that source is in a very good place. Big picture, another huge win. In their recent earnings, Qualcomm talked about a $16 billion backlog. This is going to be additive to that $16 billion backlog. But if nothing else, the strategy is working. The ability to slide in a customer's software and co-develop seems to be working splendidly.
Yeah, Pat, I mean, I don't really even know what else to say. I feel like we've said this, but BMW, GM, Stellantis, VW, by the way, I mean, VW is Bugatti, VW is Lamborghini, VW is Audi, VW is one of the most comprehensive lines now of automobiles on the planet. I know everybody's enamored by the electric Vet and the electric F-150 and but I think VW, BMW, for instance, are probably likely to be some of the most realistic competitors in the Tesla world. And it's going to be on the back of having strategic partnerships with companies like Qualcomm. And so, basically the digital chassis, the scalable, sort of modular approach that's being taken is a winning formula. Yeah. And The $16+ billion pipeline now, this is an add to that, is probably the most clear indicator that this particular business unit is on fire. Now the revenue is trailing. So for everybody out there that's, waiting for the dollar signs to come in, Qualcomm's revenue in that business unit has been palpable. It has grown significantly. But the success and the growth of that particular business is material. It's important. And in the long run trajectory for the company, it's going to continue to basically carry it to new heights. So, you know what, Pat? I'm going to end this. You know how emotional I am about the market. I'm going to end on this. Tech is important and tech is growing. And sure, we may see a little bit of recession, but tech has both recessionary value in terms of its deflationary, utilization in enterprise. And then when we swing back to growth, or when we start sending more stimmy checks out and start forgiving debt, that's going to be spent on PCs, new iPhones, and smartphones from Android, and people are going to buy cars. Long story short, chips are at the foundation of everything we use right now. And so while everybody's digesting that the market's a little crazy, I hope you hear from today's stories, whether it's Dell's $100 billion sales year last year, or it's what's going on with the Lattice, AMD, Qualcomm, or the industrial innovations of Honeywell, and of course the price innovation coming out of T-Mobile. What a week for tech, Pat. And I'm smoked. I'm tired. I learned last week at Salesforce Analyst Summit from an Irish guy that they say they're crack when they have a good time. So last night they did crack. They did crack last night, which means they had fun. But if you're not Irish, don't say that to your boss because it might get you fired. But hey, Pat, we good to wrap?
We're good.
All right. Thanks, everybody. Great show this week. Hit that subscribe button. Be part of our community. We love you for sticking around. We love you for engaging, sharing, and amplifying. Join us at the65summit.com. We're going to be kicking off with some of the world's most prolific thinkers in tech, the Davos of tech. We hope to have you there. For this episode, time to say goodbye. Pat, safe travels off to Oregon. I will see you in Orlando on Monday. And everybody else, adios.
Have a good one.